Did you know that an analyst predicts Tesla will hit $10 trillion in the near future? Some people continue to think that Tesla is headed towards becoming one of the most valuable corporations, even in the face of a plethora of seemingly unending negative reports. It would truly be unfortunate to miss this one. Demand for Tesla is at an all-time high. Wall Street analyst Pierre Ferragu stated, "Everyone I know at Tesla and with whom I could discuss that topic agrees that demand is way above what hopes were a few years ago." Actually, there have been numerous signs that Tesla is seeing high demand despite the substantial price rise for its electric vehicles this year. When petrol costs increased earlier this year, there were rumors that Tesla's order rate in the US skyrocketed to all-time highs. For certain model variations, Tesla even ceased accepting orders due to excessive backlogs. The analyst who attended an analyst session at Gigafactory Berlin and saw Pierre Ferragu speak was particularly impressed by how well Tesla operates there. Berlin is obviously far more efficient than Fremont, Ferragu noted in a note to clients. Ducks encircling the fab from all angles and making sure parts arrive at the proper point in the manufacturing chain simplify logistics inside the plant. The one manufacturing line can produce 10,000 automobiles a week at full capacity, with a cycle time of 45 seconds. Interestingly, this objective accommodates for a healthy 25% downtime, since it takes almost 5 full days non-stop to process 10,000 cars at a time of 45 seconds each car. Most crucially, cars are now made using rear castings. However, when 4680 structural battery packs become available, production will switch to both rear and front castings. Ferragu has set a price objective of $530 for Tesla shares as of late August, which is a considerable increase from the stock's current value of $275 per share. In the long run, Ferragu even believes Tesla might be valued $10 trillion by 2030, although it is predicated on the company meeting its target of producing 20 million electric cars annually by then. That is around 4 times Apple's current valuation, for contrast. According to Pierre Ferragu, there are other analysts who believe Tesla is worth $10 trillion. There is a significant variation in the estimated time frame between some extremely cautious predictions that Tesla may be a $10 trillion corporation in 20 years and Ferragu's belief that it is feasible by the end of the decade. Full.com authors Matt Frankel, Brian Withers, and Jason Hall talked about Tesla's potential to become the Amazon of energy in a pre-recorded podcast. "I think Tesla is a great product, and I like it." Matt Frankel states, "I believe Elon Musk has done more to transform the car than anybody since Henry Ford." According to Frankel, Tesla will undoubtedly overtake Amazon in the energy sector in 20 years and supply solar panels for around half of all residences in the United States. If ever everyone has a Tesla vehicle in their garage, if everyone has the battery pack that can run your house, if everyone's using their charging network to power their cars regardless of what brand they are, there's a case to be made that this could be a $10 trillion company in 20 years, Frankel says. "I think Tesla is going to become a tech company more than just a car company," said Brian Withers. "I feel safe stating that, given the course of the next 20 years, more could occur in 20 years than in the next 5 or 10. Conversely, some experts think Tesla is well positioned to become the first firm in the far future to have a market capitalization of $10 trillion. It was suggested that a number of radical improvements were the root reason of this anticipated significant advancement. Although Tesla has undoubtedly made some very important innovations, such as the robotaxi and the humanoid robot Optimus, to mention a couple, Tim Davies of Poland Global Investments, a provider of Web 3.0 data storage and a next-generation asset manager, stated that Tesla is headed towards being a $10 trillion company and beyond. After doing a thorough analysis of Tesla's potential in the latter half of 2021, Poland constructed a 30-year demand model for sales of electric vehicles worldwide, which indicated a significant upside in the company's stock. He predicts that Tesla will rule a sizable EV industry over the next 30 years. As production capacity and profit margins increase, Tesla will be able to keep lowering the cost of EVs and gaining market share at the expense of conventional automakers, who were slow to seize the EV potential. Additionally, the analysis demonstrated how Tesla is the only company to combine solar energy, battery storage, and electric vehicle EV transportation into a single package, providing a Sydney family of four with a total savings of $70,000 Australian dollars over a 25-year net present value (NPV) on their power and fuel expenses. This covers the cost of 2 Tesla cars over a 25-year period. According to Davies' projections, Tesla will produce more than 34 million vehicles annually by 2040 and reach a peak of 45.6 million in 2049. The company expects to generate over $3 trillion in revenue annually from the sale of cars, software updates, and energy systems starting in 2047. Additionally, starting in 2037, Tesla will produce $500 billion in free cash flow annually, and starting in 2047, it will surpass $1 trillion in US dollars annually. According to Davies, Tesla will give $5 trillion in dividends to shareholders over the course of the next 30 years, with share buybacks on a regular basis starting in 2035 and shareholder dividends starting in 2025. Nevertheless, he thinks that by 2050, Tesla will have accumulated a long-term investment portfolio worth more than $10 trillion. Once more, such a jump from the timelines of other specialists. According to Davies' study, there is a big upside to Tesla's share price from its current levels in terms of valuation. Using a discounted cash flow valuation approach, Davies values Tesla at $3,369 per share, making it the largest corporation in the world with a possible market capitalization of $3 trillion. In 2030 and 2040, that valuation rises to $6,244 and $9,056, respectively, per share. But keep in mind that since these projections were set over a year ago, Tesla has undergone a number of notable changes. Additionally, the current production hiccup was caused once more by the lockdown at the Shanghai factory. There was supposedly no market for Tesla's electric vehicles for years. The demand for EVs had collapsed, people didn't want them, and bankruptcy was imminent. But in actuality, as has been the case for many years, demand is rising astronomically. Once more, according to Wall Street analyst Pierre Ferragu, demand for Tesla is at an all-time high. Tesla has managed to demonstrate continuous success in terms of production, delivery, and profits, while automakers all around the world struggle to obtain parts and produce cars. All of Tesla's models are seeing frequent price increases, yet orders are still coming in far faster than the manufacturer can fulfill them. When you consider that petrol prices have skyrocketed and that most competitors' models are hard to buy, Tesla is in a very advantageous position. Indeed, Tesla claims that it will eventually deliver its promised Cybertruck pickup, Roadster, and Semi, as well as maybe an autonomous taxi and humanoid robot, despite depending on 4 models for its explosive development. It should be mentioned that despite having just 4 cars in its inventory, Tesla has had tremendous growth in recent years, the Model S, Model 3 compact sedan, Model Y compact crossover, Model X midsize crossover, and Model midsize sedan. Experts predict a massive increase in Tesla sales and stock price upon the arrival of the Semi, Cybertruck, and Roadster. 3 major factors, according to UBS analysts, should help Elon Musk's electric car maker recover from a harsh 38% sell-off this year that was caused by shutdowns, shortages, and a wider tech recession. These factors make Tesla's future look brighter than ever. Record demand for its cars is the first component of the jigsaw, resulting in record backlogs. It's true that some Tesla models require a year or longer for delivery. The 2 new Tesla facilities in Texas and Germany, which are starting up production and should eventually treble the company's production capacity, were also mentioned by the experts. They anticipate that in the upcoming quarters, the company's automotive margins will remain above 30% thanks to the new factories and Tesla's pricing. They contended that in the future, Tesla will have an advantage over the competition when it comes to obtaining vital parts like batteries and chips. According to UBS, the next major industry bottleneck will be batteries, and Tesla will do better than competitors since it produces its own cells and has greater access to raw materials like lithium. According to UBS, Elon Musk's supply chain is structurally superior, which will enable Tesla to grow more quickly and profitably than traditional manufacturers. If you want to learn more about how Tesla will soon fly, subscribe to this channel.